Welcome to the Kevin Davis Insurance Crime Insurance webinar for community associations. My name is Sherry Branson and I'm your moderator today. We're going to be having a Q&A at the end of today's webinar. As you can see on the screen in front of you, my email address is up on the screen. If you have any questions regarding the information that we go over today, please send me an email during the webinar, and at the end of today's session we'll answer your questions. My main presenter today is Kevin Davis, the president of Kevin Davis Insurance. Welcome, Kevin.
Hi, Sherry. How you doing?
Good. How are you doing?
Pretty good this afternoon. It's kind of a nice day out here in L.A.
Oh, good. Getting nice weather. That's great. That's great. And Kevin, I understand you've been in the community association industry for quite a while, working in insurance. How long have you been in the industry?
Well, I've been handling crime and directors and officers liability insurance for community associations for over 30 years. My first condo association was in, 1981, where there was only a few thousand associations. Now there are over 300,000 in the United States. We write about 10%, which makes us one of the largest writers of this class of business in the country.
And Kevin, I understand that corporations everywhere are getting bitten by crime in record numbers. What are you seeing?
Well, that's my goal today, is to explain what crime insurance is and why the sudden rise in the number of crime claims over the past several years. I also want to discuss the importance of crime insurance for community association and claim trends impacting them. I'll finish with several key reasons why claims are denied and what happens after a loss. Now, I'm going to start with a very simple crime insurance story to tell you how crime works. William works for the Hall Construction Company, where once a week William would take home a wheelbarrow full of sawdust. And every week security would go through the sawdust to make sure nothing was stolen. The owners of Hall Construction Company believed William was stealing tools, but just couldn't prove it. Eventually William retires, and the owners confront William and promise not to prosecute, but he had to know what he was stealing. Well, William told them the truth. He was stealing wheelbarrows. And that's what crime is all about. That's why crime coverage is important today. Crime insurance is when theft occurs. It could be over a number of years. It could be by a trusted employee. Your clients will eventually find out, which means your competitor finds out. You feel foolish, betrayed, the company reputation suffers, the company may not even survive. That's why crime insurance is necessary. Crime insurance is about trust. You trust your employees and the people you work with. However, we live in tough economic times, and as a result, that trust is sometimes misplaced. As layoffs continue and the economy struggles, people are becoming more and more motivated to steal. Whereas 5 or 6 years ago, this would never happen because the job prospects were greater and there was this healthy belief that the future would be a little bit better. Well, those days are gone. We are more pessimistic about the future and feel things will not get better anytime soon. Now, the interesting thing about crime is that fraud can really go easily unnoticed in good times since companies are making a profit and everybody seems to be happy. So companies often overlook the expense report completed improperly or the credit card used for personal items. In downtimes, money is critical. This is why everything is often checked and double-checked. So the likelihood of finding a problem is greater in downtimes than when things are going well. Now, one of the big problems we see in crime insurance is that it's a hard sell. Most people don't believe it's necessary, that it's a waste of money. And they usually give you one of these 3 reasons. The first reason is they trust their employees. Second one, their employees do not have access to funds. And 3, the company has excellent internal controls. All right, let's take the first one. They trust their employees. Well, no one will ever hire employees they don't trust to handle their funds. Everyone believes that their employees are honest, trustworthy, until they're not. We've had a claim where the daughter of an employee hacked into her mom's computer at work and stole several thousands of dollars. We've had claims involving longtime employees who are fine, upstanding citizens and involved in the community they stole. The second one, access to funds. Well, you don't really need to have access to funds to cause a loss. There are dishonest people out there that will steal anything and sell it. We had a claim where an employee's job was to install kitchen appliances to several brand new homes in a new planned community. After he spent the day installing the refrigerator and the stoves, he later came back in the evening, stole them, and was later caught selling them. And finally, excellent internal controls. Internal controls are a deterrent. It will not stop a person from stealing. There are many highly motivated individuals out there that are committed to stealing funds, and they know there is a way around any control. The whole idea behind internal controls is to keep an honest person honest. Let's talk about a little bit about crime statistics out there. What's going on out there? Well, what's interesting is that nonprofit and religious organizations combined account for about 1/6 of all major embezzlements in this 2011 study. This is according to the 2011 Marquette Report on Embezzlement that was produced last year. The 2012, they're working on it right now, and we haven't really got any information on it yet. But right now, we have the 2011 information. The average scheme lasts nearly 5 years, and the average loss of this is about $750,000. Women are more likely to embezzle than men by 2 to 1, and men embezzle about 25% more than women on average, 25% more. And then about 5% of the major embezzlers have prior criminal histories. Now, when you talk about crime insurance, or you talk about crime itself, or fraud, there are 3 things that have to be necessary in order for fraud to take place. You have to have opportunity. You have to have motivation, and you have to have rationalization. First, the opportunity exists when there are weak internal controls in place and people feel they can exploit these weaknesses without getting caught. We had an example several years ago when INA was a major insurance company. Well, the bookkeeper of a now defunct insurance agency would write checks, make deposits, and do the monthly banking reconciliation. Something that should never happen. You should never have the same person doing all 3 of those jobs. You have something separation of duties. Well, the bookkeeper ended up writing the checks, got proper counter signature on the check, and made a deposit. What happened was the bookkeeper's name was Gina. So basically all Gina did was put a G in front of INA and managed to steal several thousands of dollars over several years because the checks were made up to her in her name. And without separation of duties, she got away with it. So strong internal controls are necessary to reduce the likelihood of a loss. The second thing, so opportunity is number 1. Motivation is number 2. Right now, the number 1 motivating factor is gambling. People love to gamble, and they're stealing and gambling. However, the overwhelming reason has been and always has been is because of greed. That's right, the desire to live a more lavish lifestyle. Now, we always thought those people stole because to help alleviate some kind of a social problem or a sickness or illness. No, it's pure greed. That's all it is. And then there's rationalization. We have to rationalize why we're stealing the money. And it's an attitude. Because in order to steal, in order to embezzle, you have to have the right attitude for committing dishonest act. Meaning that these people out there who do that, they believe they're entitled to the money for one reason or another. They believe they must do it to save a family member or a loved one. They believe all can be lost if they don't steal the money. So they have to rationalize what's going on and why these things are happening. Now, these are the top 10 claims for 2011 top crime losses. Now, the more interesting thing is that out of those 10, 5 of them are from financial institutions. So you would think that a financial institution have great internal controls and stop you from stealing, but 5 of the 10 are from financial institutions. Now, one of the more interesting one is the last one, number 10, Georgia Englehart of Antioch, California. She happened to hold a record for stealing over a 30-year period. 30-year period, she stole money. She forged checks, altered checks, forged signatures, made phony transfers to about $6 million. In October 2011, Georgia pleaded guilty to 6 counts of tax evasion, was sentenced to 48 months in prison, ordered to pay a total of $6.1 million in restitution, back taxes, fines, and fees. Now, the largest embezzlement case that made the news in 2011 was for a whopping $70 million. This case involved 71-year-old Clayton Smart, who managed to fleece as many as 13,000 trust accounts he controlled for customers at several cemeteries he owned in Michigan and Tennessee in the mid-2000s with the help of 2 other people. In September 2011, Smart was sentenced to 20 years in prison, the maximum allowable by law, in order to pay back $48 million in restitution. About 3/4 of the money was sent to Michigan for their victims and another quarter to Tennessee victims. Now, he didn't make this list this year because he was on a previous list either last year or the year before, and that's why he's not on the list right now.
And Kevin, I just wanted to take a moment to mention again, if you have any questions regarding any of the material, please send me an email to sbranson@kdins.com. Thank you, Kevin.
Yeah, no, thanks you, Sherry. Now let's talk about community associations and crime insurance. For community associations, the need for crime insurance has become more and more of a necessity, in that most corporations have accounting departments with some internal controls. However, with community association, there is very little oversight for people handling funds. There are no requirements to become an association board member or treasurer. Anyone can do it. Then community association turnover handling all these funds, some will even hand over their reserve account, which should never happen, to the independent property management firm. And again, with very little oversight. This has created very strict requirements for crime insurance by lending institutions and more government regulation. Lawmakers in several states like Virginia and Maryland are considering legislation that would establish the accountability standards for community association management professionals. Now, when we talk about crime insurance, there's a lot of different names for crime insurance. It's called fidelity insurance, fidelity bond, employee dishonesty, employee theft, dishonesty policy, but they're all the same thing. A crime insurance policy pays direct loss of money, security, and property caused by a theft or forgery by an employee. When we talk about that, we're talking about 2 key words. What is a theft? And who is an employee? When we talk about what is a theft is the intentional unlawful taking of money, securities, or property to the deprivation of the insured. There has to be an intent to cause a loss and obtain financial gain. Without it, there is no loss. So if somebody, the treasurer, takes the money and invests it improperly and loses that money, that is not a claim because there's no intent to cause a loss. Second thing that's important is who is an employee. An employee is someone compensated by salary, wages, or commission. So here in community associations, if you're not compensated by wages, salary, commission, there is no coverage. Therefore, you have to understand that if you have a crime policy and you have volunteer board members, that you have to amend the definition of employee to pick up non-compensated board members. So it's critical. You have to pick up non-compensated board members in order to have the coverage you need for community associations. Now, the other coverage that's important is the coverage for the property manager. Because if there's a major crime or major loss occurring against a community association, then it would usually involve the management company. Many of the major claims over the past few years have gone unpaid because the loss was caused by the property manager and they were not insured under the D&O policy or the crime policy. These are the extra coverages that need to be under the crime policy. Number one is computer crime. Computer crime is really critical these days because this coverage usually applies when an employee leaves his password out in the open and the individual comes out onto the premises and finds it and uses that person's computer to embezzle funds. Very important coverages. The next one is wire fraud transfer. This is very similar to computer crime, except coverage applies when someone other than an employee gets access to a computer off premises and uses a person's computer to embezzle funds. Computer crime is for loss on the premises, while wire fraud transfer is off the premises. That's the difference. By a non-employee. Another coverage should be added is forgery and alteration. Forgery and alteration is critical because you have more and more printers, computers, electronic technology. They're producing more and more of these checks. These checks are becoming easy to duplicate, and as a result, checks are forged or altered along with other documents. You need this coverage. Make sure you buy it. Also, money orders and counterfeit currency. The same reason. Today's technology has made it extremely easy to create false and worthless money. Money orders and counterfeit currency, critical coverage. All right, now, let's talk a little bit about fraud trends impacting community associations. One of the first ones that we're seeing more and more of is the wire fund transfer. Here's association treasurer received an email that contained a virus. The virus obtained the user's ID and password to the condo's bank account. Electronic wire transfer was initiated and caused $147,000 to be wired to a bank in Arizona. Wire fraud transfer. Check forgery. You see it all the time. Association board of directors made checks payable to herself and happened to forge the signatures of the other board members. Fictitious invoices. An employee embezzled money by generating and proving for payment a series of false or inflated invoices, expense reports, or personal credit cards. Which brings up unauthorized use of credit cards. And maintenance supervisors made unauthorized charges on a charge card in the name of the association. Theft of property. This is an interesting one. This is a property that was stolen. 2 former employees stole 52 appliances from the insured, including 9 dishwashers, 19 ranges, 26 refrigerators, and 1 washer. And then we have theft by a third party. An employee of a subcontractor valet service ran up long-distance bills of approximately $3,400. These are the kind of claims we're seeing on crime for community association losses, and we're seeing more and more of these type of things happening all the time.
Okay, and we move on to our last section. Just wanted to mention again, my email address is sbranson@kdins.com, sbranson@kdins.com. If you have questions, we'll be getting to them shortly.
All right, so now what we're talking about is what happens when there's a loss. This is the one area where most people really don't understand what happens after a crime loss. Well, let's talk about the board president. The board president, Samuel Dawkins, called his insurance broker outraged because he discovered his best friend and treasurer of Happy Valley Condominium ran off with his wife and $150,000 of the association's reserve account. So the first thing that happens is you must have notification. So Mr. Dawkins' insurance agent notifies the Great Big Insurance Company of the loss. The notification was in the form of a telephone call, but a fax, an email, a court loss form, or a lawsuit would have worked. Next thing is coverage verification. So the first thing the Great Big Insurance Company did was to appoint Rachel Collins as a claims examiner, where she immediately verified the coverage with the underwriters by reviewing the underwriting file, copying key documents, verifying effective dates, limits, deductibles, and endorsements. Then we get an acknowledgement letter. Rachel then contacted Mr. Dawkins and sent an acknowledgement letter stating she would be responsible for handling the claim, and if you had any questions or issues concerning how things were being done, just let her know. Then the proof of loss is next. What Rachel did was enclose a proof of loss form to be completed by Mr. Dawkins with specific information regarding the claim. Some of the key questions are, number one, does it explain the situation thoroughly and how it happened? Does it include supporting documentation for the amount claimed? Is it signed by an authorized individual and notarized? Now, Mr. Dawkins doesn't have to notify the police, but if a police report has been filed, a copy of it must be turned over to the claims examiner. Then comes the investigation. Once the proof of loss has been reviewed and verified, Rachel tries to meet with the treasurer, the one who stole the money, and allow him to either refute, admit, or clarify the claim being made against him. If the treasurer admits the loss, Rachel obtains a signed statement and promissory note outlining agreement for restitution. If the allegation is refuted, the claim is judged on the merits of documentation provided by Mr. Dawkins, and the amount is paid based upon this documentation. Now, occasionally it is necessary to hire an accountant to verify the loss amount. Now, an accountant's purpose is to verify the amount, not to make the claim for Mr. Dawkins. Rachel will want to also review the personnel file. The reason to verify the employee-employee relationship and determine if there were any incidents of prior dishonesty in the past. Because if the treasurer committed a dishonest act in the past, there will be no coverage. Once you embezzled money, you cannot be bonded again. You cannot be covered under a crime policy. So if there was a claim and he committed a dishonest act in the past, coverage would not apply. Rachel will have record of the principal's date of birth, last known address, and Social Security, just in case she wants to go after him and salvage and try to get the money back. When the investigation is complete, the claims examiner has four options. The first thing is to accept and pay. So if the claim is fully documented, falls squarely to coverage, and no issues are outstanding, Rachel will issue the check for $150,000 in exchange for a release signed by Mr. Dawkins. The release closes the claim and gives all the rights to the Great American or the Great Big Insurance Company to go after the treasurer for $150,000. Number two, reject and deny. So a denial letter is prepared if the loss does not qualify for coverage under the policy. And number three is a compromise. Sometimes the claim cannot be fully documented, but the benefit of the doubt lies with Mr. Dawkins. In these cases, a compromise agreement will be reached to resolve the claim. Number four is any combination of the three. Some claims are clearly covered, some not covered, some should be compromised. And what happens, you put them all together, and that's what happens next. And then finally, there's salvage. See, during the life of a claim, Rachel's always looking for a way to get back the money that was lost. Sometimes there are other people involved that have some degree of responsibility. That's when salvage comes into play. I mean, a security guard who took bribes to look the other way while employees carried off products maybe have some responsibility. An accounting firm that have caught the errors in bookkeeping, it should have been a little bit more diligent. They also can be brought in. Or banks that accepted forged checks. They go after them also. The bottom line is this. It may take a long time for Mr. Dawkins to get over the shock and distrust caused by his bookkeepers and wife betrayal. But on the bright side, because of crime insurance, he can be made financially whole. And as far as the wife is concerned, there are other fish in the sea.
Well, thank you, Kevin. Thank you very much. And now we move on to the Q&A portion of today's webinar. And I just wanted to mention, if anyone would like a copy of today's presentation, please send me an email. My email address again is sbranson@kdins.com. And if you have any questions, please email them as well. And we also put copies of our prior webinars, and we'll be putting today's webinar on our Facebook page, our YouTube page, and and eventually our website. So, Kevin, I do have a question here. How do you determine the limit of liability under a crime policy?
Well, the limit of liability is now being defined by the lending institutions and a lot of state regulation. It's usually 3 months assessments plus the reserve account. That's how you determine the limit of liability.
Okay. And what is the minimum premium for a crime policy, approximately?
Well, we're talking about for a $100,000 limit, probably about $400, $500, and that includes the property management company. And deductible is probably about $250 or maybe even $500.
Mm-hmm. Okay, great. And Kevin, what is the largest crime loss you've ever seen?
Well, the largest one that we've seen for community associations had to be one in probably Maryland, Virginia, where it's about $6 or $7 million, where a property manager ran off of all the association's reserve accounts and operating accounts, and he ended up getting caught. And I think he's in jail now, but it was a really tough time. He had to end up a gunfight with the police department and everything. It's really been a really tough claim.
Oh, that does sound like a big one. Great. Well, thank you, Kevin. Thank you very much today, and thank you to everybody for attending. So glad you could be here. And I wanted to make an announcement that our next webinar is going to be on June 27th. It's an open forum webinar that's on our D&O liability policy, where you can email your questions to me prior to the webinar. We'll answer those early bird questions first, and then we'll also answer questions live during the actual webinar. You can email in questions while it's going on. And that's going to be on D&O liability, and that's on June 27th. And again, if you'd like a copy of today's webinar, please send me an email. My name is Sherry Branson, and thank you very much for being here today. Have a great afternoon.
Yeah, thanks a lot, everybody.